Hey guys, quick announcement here before you dive into today's show. We just locked up 3 individual assets that are all off-market, direct-to-owner deals that are going to help our partners and you, the podcast listeners, generate a ton of cash flow and build legacy wealth. And so I just wanted to take a moment to drop in here and invite you to a webinar that I'm going to be hosting on Tuesday, May 18th. And we're going to walk through each of these respective investment opportunities. One of the big reasons why we're doing this webinar is because we've had a ton of questions about parking lot investments here over the last couple of months. Now, as you know, we've been doing mobile home parks for nearly a decade now, and most everyone understands that business model. However, many of you probably know little to nothing about parking lot investments and the incredible opportunity within this niche. Now, one of the 3 deals that we're going to cover in this webinar is an institutional grade Class A parking facility located right here in my backyard of Clearwater Beach, Florida. Now, for those that aren't aware, Clearwater Beach has been ranked the #1 beach in America multiple times, and it's where I've called home for the last 2 decades. And so really no one knows this market better than I do. The Tampa Bay MSA is one of the fastest growing markets in the country and is on absolute fire. And so I'm super excited to share these opportunities with you guys. And so if you'd like to learn more, please go over to sunrisecapitalinvestors.com/webinar to get signed up, and I'll see you there.
You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is a real estate and ground lease expert, Stephen Waldman. Now, Stephen is the founder and president of Ground Lease Capital Partners, LLC, a national leader in acquiring, originating, and investing in ground lease transactions, as well as an advisor to institutional investors who are seeking exposure to this asset class. Now, prior to founding Ground Lease Capital Partners, Stephen was the co-founder of Spectrum Advisors, a family of companies consisting of a Mezzanine Fund, a title insurance agent, and a 1031 exchange company, where he represented both high net worth and institutional investors in the acquisition of ground leases and leasehold positions. In this capacity, Stephen successfully transacted over $700 million in acquisitions for his clients. And so with that, guys, I'm excited to welcome back Mr. Stephen Waldman to the show. Stephen, how you doing today?
Good. Thank you so much for having me back. I really appreciate it, and I love listening to your show. So thank you, Kevin.
Yeah, thank you, Stephen. And as we mentioned, just to provide some context to the listeners here, we're recording this on February 2nd. You probably won't be listening to it probably until March or beginning of April. But Stephen's getting blasted right now up there in the Northeast with this nor'easter that came through and blanketed the northeastern states with somewhere upwards of 20 plus inches of snow. So in any event, down here in Florida, freezing my butt off with flip-flops on. I do have a sweatshirt on right now, but in any event, not to rub it in, Stephen.
No worries.
Yeah, excited to have you back here. Looking forward to have you back on the show and find out what's really happened here over the last 4 or 5 years since we had you on last time. So for those, just for those that might not have listened to our previous show that don't know of you, Stephen, maybe take a few minutes and give our listeners a little bit of a background of yourself. Who you are, what it is you do, and ultimately how you got into the space.
Sure. So not to bore the audience, but I've been in the real estate business for about 40 years. And I ran the 1031 exchange department at a couple of different title companies here in New York and handled billions of dollars of 1031 exchanges, which is probably a whole nother show. And been doing ground leases since about 2006, although the first ground lease I was involved in, my family owned the land under what's now the Mondrian Hotel in Miami Beach. And what happened there was, and to give you a sense of how and what it is we do today, is that apartment complex was owned by Forte Towers at the time. And we had a house there before it became Forte Towers, and they wanted to buy it. We had a problem at the closing, and we ended up leasing the land to them under a 99-year lease, and they built the Forte Towers. And that was my first sort of entree in how I became aware of ground leases. Then later on in life, when I was running the 1031 exchange department, there were different syndication groups that were syndicating out properties to satisfy 1031 exchanges. And one of them came to me and was worried about the amount of equity that they would have to raise in order to complete a transaction. And I suggested that they do a ground lease. And for the audience and for just recapping purposes, what we do is we take a $100 million building or a $10 million building, carve off the land for approximately 30%, put a 99-year lease on it, and create two separate interests through that process. And so the ground ownership, while it tends to be low yields, is the safest thing you could do in real estate. Because if there's a default, you don't go through a foreclosure process. You actually evict the tenant and get whatever that value is above that. In my example of $10 million, buying the ground for $3 million, you would get something above $3 million if there was this default. So I hope that's not too much too soon.
No, not at all. And so where does the capital typically come from on the ground lease side? Because the capital still has to arrive somewhere, right, to satisfy the seller of that property or the development of that property.
Yeah. Yeah, so a bunch of different ways that these transactions happen. So it's a much better alternative to a sale, and I can go into why. So that's one way. As an alternative, somebody is selling a property for $10 million, and they could sell that property for $10 million and either do a 1031 exchange or pay the capital gains tax on that sale, presuming there's a gain, or they can sell the ground for roughly the $3 to $4 million, and put a 99-year lease on it, and they could finance that lease. So of the roughly, call it $4 million for the ground, $6 million for the leasehold in value, they can typically get 65% of a loan against their leasehold interest. And so between the two, they're pulling out about 80% of the value, and most of that comes out to them tax-free. So it's very attractive as an alternative to a sale. As the other way that it happens is people are buying properties and they don't have the capital to put into a transaction. So one of the ways to create the capital stack is to sell off the land for the 30 or 40% of the value, then go out and get financing on the leasehold, again, roughly 65% of the leasehold value, and reduces the amount of the equity that goes into the transaction. So it's very attractive, and if structured correctly, it's very attractive to the landowner because it's very secure streams of income that grow roughly 2% a year. And for the leaseholder, they have less equity in the deal, and their returns go up.
What type of debt's available out there today for a ground lease?
Right. So on the leasehold side, this 99-year leasehold, it's typically 65-70% of that leasehold value. And the rates are this.
Non-recourse?
Both. Depends on the transaction, but typically non-recourse. We're doing some construction deals now that involve some tax credit, which is a whole nother show that we talked about a little bit earlier, Kevin, but 65-70% of leasehold value, and typically in the 4-ish range today. Again, depends on the facts and circumstances to the transaction. And again, we're doing some where there's some very interesting, historic rehab that are being done where we could, where we're taking advantage of this structure. And then on the ground, it could be, 70-80% of the ground value that's getting financed.
What typically, what type of assets are we talking about here that these ground leases are under? I mean, is it all across the board, hotels, retail, multifamily, office, all the above?
Yeah, the simple answer. Yeah, the simple answer is yes, all of the above, because it works for all. At the moment, we're seeing a lot of hotel opportunities come to us. We're seeing a lot of redevelopment come to us. We're seeing a bunch of retail come at us. Where some ground up development, some historic rehabs, some solar projects. We're seeing quite a bit across the board, actually.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. Now, for those that don't know, I've been a full-time real estate investor for more than 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in Growth and Income Fund 3. When you invest in our fund, you get immediate diversification into multiple deals we acquired off-market that are already performing and have built-in sweat equity. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please visit us at investwithsunrise.com and request access to the investor presentation. It's absolutely free, and you'll get instant access to review the off-market deals that we've already purchased that you can co-own with our team. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-227-4359. And our investor relations team will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule the call. Let's jump on the phone. And with that, guys, I'd like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
Let's back up. The hotel, you struck a chord there. Mm-hmm. Obviously, the hospitality sector has been the most impacted during this pandemic. And so ultimately, is the reason why you're getting a lot of incoming hotel leads, is it due to distress? Is that part of the equation?
Yeah, that's part of the equation. We are working on a transaction. I'm going to be a little cryptic here and not give out all the details. We're working on a transaction now where they're doing a rehabilitation of an office tower in a city in the Midwest and converting that, and we are buying the land underneath, giving them back a 99-year lease. And then we're also investing in the leasehold through buying tax credits from the project.
Very interesting. And how long is the typical ownership time frame? And we talking 10, 20 years, 5 to 10 years?
It could be, well, it depends on which perspective you're looking from, looking at and viewing this from. The ground, they're separate interests, so the leaseholder can buy, sell, or keep as long as they like, and really the same goes for the ground. So, it just depends on what and the rest of the market does and what the opportunities are and what buyers may or may not be out there for either position.
More so using your firm as a conduit, I guess, is where I was coming from with that question.
Sorry. So ask me again. I apologize.
Your firm acts as a conduit, right? I mean, you help facilitate and place capital into these ground lease transactions, and so I'm assuming the funds are being pulled together, from multiple different sources. So what, or maybe correct me if I'm wrong. Am I going off the rails?
Yeah. No. So we typically buy and hold the ground, the fee positions.
Okay.
Well, occasionally we'll sell them if the opportunity arises and it makes some economic sense for us to do so. So in terms of how long we'll hold the land, it could be anywhere from several years to, multiple decades to very quickly. There's been a transaction where, you get a X amount of years of upfront income. And so you decide to take that income and move on with your life, depending upon what people's needs are. This is very good. These fee positions are good for a lot of, because they're like a bond and so super secure. They're good for people that want to generate income, generational wealth building, or a satisfying a 1031 exchange.
Yeah.
So, we get these calls all the time of people looking to satisfy these exchanges or want to make investments. And it's just about the safest thing. Not about it. It is the safest thing you can do in real estate.
And what are the typical yields today? What would one?
5% today, unlevered. You probably get some leverage on that, and maybe bump that up to maybe a 6 cash on cash. And then you got that a little bit of the growth factor to the income stream. If you have $1 million of ground rent or $100,000 of ground rent the first year, that grows 2% per year. So it's pretty good compounding effect over some time, and that helps against rising interest rates and inflation.
What is a typical minimum investment for the retail investor to get involved in a investment such as this?
Well, typically it's sort of the one hotel I'm working in right now is like 21 it starts out sort of $5 million minimum, I guess. Okay. I've seen some smaller deals get done and go up to, I've done them as high as, $85 million. So, it's all over the map in terms of size, and depends on the investor's needs and what we have available at the moment.
Okay, got it. What else am I not asking you, Stephen, about ground leases that we need to be covering here?
Right. So from the ground owner's perspective, right? Yes. Again, you're buying what you're really buying here is a super secured stream of income that, my father always used to say, if you can buy something at 50 cents on the dollar, do it. He was in the restaurant supply business, and, anytime we used to buy truckloads of Chinaware together, and, we'd haggle over things. And if we thought it was a good discount to its value, we'd buy it. And the same thing applies here. If you believe that a property is worth $10 million and you can buy the ground for $4 million, you do that all day long. And the beautiful thing about a ground lease is that if things go wrong at the leasehold level with your tenant, mm-hmm. right, you don't have to foreclose and go through a lengthy process. You evict because it's a lease, and there's no landlord responsibilities to operate anything. So there's nothing that the tenant can claim that the landlord did or didn't do. So it's a very, like I said, simple thing to own and manage. It's great for generational wealth building. It's great for families where their children may or may not be capable of managing for either physical or mental challenges they may have. It's creating lifelong streams of income for handicapped or mentally challenged or physically challenged kids, or just, let's say a family has, generational, they had the meatpacking district and they sell their business. And now how do you divide up that money mm-hmm. With the next generation or 2 or 3 generations out? This is a great tool for it because you're simplifying who gets what for what, and it's very predictable streams of income. Got it. Right.
No, it's very interesting. Mm-hmm. A question I'd like to ask you, this might be a little bit off topic here, and sure. But I'd like to throw into the show. And everyone always talks about the best deals that they've done of their career, but no one ever really speaks to like the right. most challenging, the ones that kept them up the most at night, what have you. And this might be related to a ground lease transaction. It could be related to another transaction that you've been involved in your 40 plus years in the real estate space. But what comes to mind when I ask that question? The most challenging deal. What was it? What was the challenge? How'd you overcome it? And ultimately, what would you have done differently the next time around?
Well, okay. So it's a tough question to really answer because, I'm oversimplifying what it takes to create one and close one in order to explain what it is we do. It's not as easy as it sounds to get them created and done. So therein lies the difficulty, really. Some of the fun ones that I've got involved with was the land under the water Club with the Borgata Hotel in Atlantic City. Like I said, the land under the Mondrian Hotel in Miami. I did the land under the Johnstown Mall in Pennsylvania. The only one that in the hundreds of millions, and I've done about $700 million worth of transactions here. The only one that's ever failed was the land under a limited service hotel just outside of Atlantic City. And that what happened there was the leaseholder defaulted on their note, continued to pay the ground rent, by the way. And there was a loan with, I think it was Prudential. That lender continued to pay the ground rent, foreclosed on the leaseholder, sold that note to somebody, and that buyer ultimately defaulted and took over. And the ground guy took over and has been reasonably, I haven't spoken to him in a couple of years now, but I think he's been reasonably successful in managing through, I imagine even through COVID. But like I said, it's been a couple of years since I've talked to that gentleman. I should give him a call.
Well, again, hopefully he got that ground at 40 cents in a dollar, right? Generally speaking.
Yeah, he did. Yeah, he did. He was fine, Yeah. I mean, even with that one default, I'm sure he came out fine.
That's the only default you've seen in your history of doing this?
That's the only one that I'm aware of that I've done.
Yeah.
What's nice about what I should explain to the listeners and to yourself is that what's nice about having a lender at the leasehold level is that while it's not explicit, effectively you have a bank guarantee for your income stream, because that leasehold lender, as long as there's a value above your $4 million in my $10 million example, that leasehold lender will never let you get the leasehold. Right. So long as there's a dollar above, they're going to keep and manage it or sell it.
Sure.
Right.
I love it.
So somewhere between, So somewhere between, 4 million and 10 million, let's peg that at 6 million or 7 million or 8 million. If there's that value there, that leasehold lender will never let you get that position. So you effectively have a bank guarantee, although not explicit. You effectively have a bank guarantee so long as there's a lender at that leasehold level.
Is there an opportunity here, just thinking for like the smaller investors out there, is there an opportunity on a smaller scale to, a sale leaseback situation where a company owns their building, maybe they own it free and clear and ultimately are looking for to generate some additional revenue. Maybe they don't want to sell out entirely, the building top and their ground, but ultimately want to sell the ground itself and ultimately, create a smaller transaction for a retail type investor.
I mean, right now I'm looking at a transaction that's in the, call it a couple $1 million price point.
Okay.
So we're looking at that, and I've done them as small as 500,000, but the difference is that when you get down into that sort of 2 million and below, a lot of times people go towards what's called the triple net leases with these credit tenants where you're buying a Walgreens or a CVS or a McDonald's. Now those yields are lower. Mm-hmm. Right. And you don't get the increases that you get with a ground lease, but you do pick up, if you're buying the whole thing, buying the whole land and building, what you give up in a ground lease, I guess the only real negative is that you're giving up depreciation. You don't get to depreciate the building because you only own land. Right. So that's really the only negative to owning the fee.
What are your thoughts with the new administration and threats with 1031s going away? How do you feel?
Well, that's an interesting, it's an interesting conundrum, really. I think that I was very surprised to actually hear that come out of Biden's mouth. And, I'm a fan to that, but to him. And I was surprised to hear it come out of his mouth so early on in the election process that he wanted to do away with 1031s. Every once in a while throughout my real estate career and running the 1031 exchange department at a couple of different title companies here in New York, there's always been a threat of removing 1031. And then the politicians get educated to why it's a benefit rather than a detriment. What they look at, or Biden might be looking at, is all these folks that are not paying or deferring their capital gains on the sale of a property. And what they're not calculating in is that because of the rules surrounding 1031, and you have to, go through this qualified intermediary process, and you have to identify what it is you're going to buy in 45 days, and you've got 6 months to close on the transaction, you're now under pressure to buy in order to defer that gain. And so all these transactions happen as a result of that. Mm-hmm. And because of that, the real estate brokers make money. The lawyers make money, and the real estate guys make money and pay tax. The lawyers make money and pay tax. The city and state and county get recording fees, and the title insurance guy gets money, right? And so all these people, and the accountants make money in the process. So there are 5 or 6 different groups of people that are in the transaction that are a result of a 1031 exchange and generate income, rather than capital gains tax would be taxed at a lower rate. So at the end of the day, it actually is revenue positive, not revenue negative. So if it goes away, I think the market of triple net lease deals, these CVSs and the Walgreens, that'll slow, but to a certain extent, it'll still be alive for the time being because interest rates are so low and it's difficult for people to find a stream of income. But as interest rates go back up, unless those values will come down, and between getting rid of 1031 and interest rate spiking and those transactions slowing, you'll get a slowdown in this marketplace. And so there'll be less Walgreens to service and less McDonald's to service, and because less people are buying those properties. And every time you pass by an AutoZone or Sherwin-Williams or a McDonald's or a CVS or I go on and on with these retailers, 90 some odd % of their buildings are owned by somebody that's doing a 1031, has done a 1031 exchange. So I hope that answers that question for you.
No, it does. I mean, it's a mystery to all of us, right? And ultimately, it literally as it records, we're in the middle of a 1031 right now. Just identified a few replacement properties. So, I mean, it's an incredible strategy, and it would be at least shame if it went away. So,
it's a very good. They did get rid of over the years. I think they got rid of 1031 exchanges on artwork, and they did it on cattle, and they'd have to do it on the male, but they couldn't do it on the female, and they did it on artwork. So there's all kinds of cool things being 1031 exchanged in and out of. But ground leases, just to go back to that, is again, what you're buying is a super secure stream of income.
Yeah, and
that's valuable for, like I said, the generational wealth building. Not to be too redundant, but you get the idea.
So with the depreciation factor, I mean, if you're buying buying the ground itself, I mean, can you not depreciate the infrastructure that's in that ground?
No, okay. Well, you own the land and not the improvements. So
okay, gotcha. Gotcha.
Right. So all you have is land, and land can't be depreciated. So you don't get that benefit. So you don't get any shelter to the income. But again, you have a growth factor that you don't typically pick up in a triple net lease deal.
Yep, I didn't think about the improvement. I assumed that the improvements would have come with it, the parking lot and any underground.
Yeah, well, right, but those are capital improvements that go to the leaseholder.
Yep, understood. Right? Understood. Yep. Right. Steven, where's the best place to reach you and find out more about you and your services?
Do you want a phone number or an email or
website, email? It's whatever you'd like to share.
So I think I touched on it slightly. I've been working with and work with a company called Foss & Company, where I'm in charge of working with institutions on these selling these tax credits. So I can be reached there at Foss & Company or Ground Lease Capital Partners.com.
Okay, fantastic. Well, Steve, thanks for joining us again, and wishing you the best as you work through that winter storm up there.
I appreciate you called the time and talk with you soon, Kevin. Thanks so much for having me.
All righty, guys, that's all we have for this week's show. And so until we meet again next week, this is your host, Kevin Bubb, wishing you huge success. You take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.